GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we deliver crypto news as effortlessly as hitting remind me later on software updates every single time. I'm your host, Jay Hamilton, and today we are joined by Vinny Lingham, co-founder and chairman at Rumi.ai, also a co-founder and chairman of Civic Technologies, a tokenized identity solution for verifiable web, and a seed investor in Solana, Filecoin, Render, and some others. Vinny brings to the table a wealth of experience in both business building and investing. And so today we're going to tap into Vinny's mind to get his insights on where we're at in this cycle, the current macro environment, and how he's allocating capital in these market conditions. Before we jump in, we need to take a minute to check out our sponsor over at Uphold. Meet Uphold, a trading platform that's changing the way you think about money. Imagine this, earning up to 4.9% APY on your US dollars. No catches, no lockup periods, and no fees. And yes, it's FDIC insured up to $2.5 million. They offer access to over 300 digital assets, which you can trade, store, and exchange with confidence, knowing Uphold operates with a 100% reserve and a transparent model. Create your account, fund it with a few taps, and you're ready to go. Click the link in the description and join Uphold today. Vinny, welcome to the Milk Road Show.
Hey, Jay. Good to be here. Thanks for having me.
Yeah, very excited to have you, Vinny. Let's just start. For those of our audience who don't know you, can you just give a brief background and tell us a little bit about your investing journey?
Sure. I always tell people I'm an entrepreneur first. I've been one for pretty much my whole life. But at the very least, my adult life, I've been starting companies. I mean, I guess since I was like 18, 19. But, you know, in earnest, in the tech world, serious companies since 2003. So it's about, 21 years of being an entrepreneur and running my own businesses. So that's the lens that I have, is just as a founder, someone who builds companies, right? And starts them. I think I'm pretty good at that phase of it. I never like companies when it gets too big, and I've been acquired in previous companies by bigger companies, and I don't really like working in those organizations. They're just too big and slow. And so I've just been sort of an early stage founder, CEO. I will say that, I took to investing at some point in my journey because I kind of saw other people doing the same thing. I was like, this is cool. I can't be in two places at the same time, but my capital can. So if I get back a founder to do cool things, then I do it. So for the past, I'd say, 15 years plus, I've been probably close to 18 years. I've been investing in companies, and so I've probably invested in 200-300 companies at this point, and projects and whatever else. And when you have that big of a surface area of attack, you're going to have a couple of missed shots, a few of those. But equally, when you hit big. So I've been lucky in that regard. So that's kind of my that's like a little bit about me. Is as someone who's been a founder across multiple industries and investor across hundreds of companies.
And you're also an active Twitter contributor and a real contrarian on X. It's great you're an enjoyable person to follow because you always come out with the hot takes. You're not afraid to say what's on your mind, which is such a good thing in this space. Let's just chat about a tweet since I'm bringing up Twitter. You wrote, maybe it was 2 weeks ago, you said, I think I know how Michael Burry felt back in 2006. Now, those who don't remember Michael Burry is the main character that The Big Short, the movie, was based on. Christian Bale paid him in that movie. He's an investor and hedge fund manager who made the biggest bet and made it right and made it very rich. Why did you say that a few weeks ago?
I mean, I lost some money betting on puts, on just market puts, S&P, etc. And I was like, you know what? This is going to come down. This run is not going to go on forever. And eventually I'm going to be right. But if I keep betting on the puts, I'm going to lose more money than I can probably make when I'm right. So at some point, you got to just say, you know what? I'm done betting on the downside. Good luck, fellas. I'll see you on the other side. And just kind of go, sit back and see how things play out. I just see so much risk in the market right now. I think the market is laissez-faire. There's no, like, Buffett's selling everything and going to cash. Do you think we're smarter than Buffett by staying invested in the market? So I disagree with the equity market. I think the equity market is crazy. I think everything's overvalued. And I think there's two paths forward for the U.S. economy right now. We can accept a high level of inflation, or we can accept a recession. You cannot. We're not going to have growth and low inflation again. It's just not going to happen, and we're not going to fix the inflation problem without a cool down or slowdown. So, let's see how it plays out. So, with that, in mind, I also been posting tweets about the fact that I've gone into property, gold, silver. Not actually crypto, because I think crypto is going to be a liquidity sponge that gets drained when things crash. I think there is an argument on the whole Bitcoin store value narrative that can push us up. Whatever. I think that may happen, but I don't think it happens at the same time. I think when you have a crash, almost everything goes down. I actually think gold may buck the trend this time because the only way out of the problem is going to be currency debasement, and currency debasement is actually better for gold than Bitcoin in the long term. Bitcoin hasn't proven itself in a long enough time frame just yet. Short term, sure, but it was also rising from pennies to where it is today. So it's not easy. It's not. I mean, I don't think it's fair to compare Bitcoin to gold because just the stage of where the asset is in terms of years and how long it's been around. But so I think if you want to have a safe trade right now, I think the safest trade is actually gold. Paul Tudor Jones came on yesterday saying exactly what I said on my tweet like 2 weeks ago about gold and silver. And I think the timing is now. I think that the governments are going to have to print their way out of this mess that they've created for themselves. And it's obviously you have a bit of Bitcoin as well. You have a bit of other things, assets. But for me, it's property, gold, and silver. I think those are the three things that can really survive an inflationary cycle, because when they print their way out of this problem that they're in, they're going to stoke inflation. And I think the one thing that the equity markets are doing is they're trying to point towards, if inflation goes up, equities will outperform. Like, well, inflation goes up, rates are going to go up. If rates go up, your borrowing costs go up, your cost of capital goes up. I'm not so sure that enough companies out there that aren't levered to the hilt that will survive inflation. They will survive the rates going the other way. So here's the catch. Okay, here's the zugzwang if you play chess, or the catch 22. If the Fed raises rates to fight inflation, which they're going to have to do because it's going to come back, they're going to cause a massive recession. Okay, and if the Fed keeps cutting rates right now, they're going to cause inflation. And so they should have just done nothing at the last meeting and not cut 50 basis points. I mean, look at the bond market, right? The bond market, the 50 basis point cut, it went the other way. It went up to 4.25 today. And so this is a big issue. So the Fed keeps cutting, and the bond market's screaming at them, the gold market's screaming at them, like, you guys have made a policy error, you've made a mistake. And I've been saying the whole year that we should be raising rates further, and then they kind of paused. That people laughed at me, and I just think that I think the policy mistake was cutting. They shouldn't have cut. They should have just left it.
Interesting. And so, Vinny, this is exactly why I wanted to get you on the show. It is so natural in any industry that you're in to live in an echo chamber and only speak to the same people. And we really try to get a diversified view. And I won't deny that most of the guests that we have in the show are very much like, everything is lining up, the banana zone is coming, we're about to have a blow off the top. Now, this is mostly focused on crypto, but you could extend that to all risk on assets would be the general view. So it's fascinating to get somebody to come on the show to say, hey, no, I don't agree. I don't see it that way. I see a different perspective. Where do you think we are in the cycle? If we look at, do you think that the Fed has said that they will continue to cut rates. Now, whether they actually do that or not it's not like it's written in stone.
I don't know how they can. I don't know how they can unless they're just suicidal maniacs. Like, I don't know how they can cut rates. I mean, Japan's currencies, the carry trade, there's carry trade 2.0 unwind coming. It's like
it's back
over 100 plus in the yen. So I don't know how. And this is what I said. Like, and I said this publicly as well. Like, there's no way they should be cutting rates right now just given everything that's just going on in the world. Like, let the rest of the world cut rates if we have to, but the US dollar's got to remain strong. And yes, the interest burden is getting bigger and bigger for us, and the deficit is getting bigger. But that's not a Fed issue. That's a Treasury issue. The Treasury and the government and Congress has to cut expenses or figure out how to reduce the. Like we're going to be. The problem is they don't kind of work together. As long as there's no Treasury market dysfunction, the Fed kind of like. I don't know, man. I don't think I'm smart enough to understand all the potential ins and outs of this. All I can tell you is from my vantage point is we're like a bunch of lemmings running off a cliff, and we just don't know it yet.
Mm-hmm. So you think, do you think that we are going to go into a bear market? Or like the way you're positioning your portfolio makes me think that you think that you think we're going to enter into, and do you think that happens soon, post-election, pre-election? Like, what do you think the timing is of that? And like, what are the catalysts that would lead to that?
I don't know. And that's kind of why I'm like, I'm in the Michael Burry sort of point. Is like, no one knows. But Burry was right a year before he was right. And his investors, a lot of his investors pulled out the year that he was going to be right. They were just pulling out. They were like, "This is crazy. You know, we're out. We're done. You're mad." Eventually, he hit it, and I think that's the case. So it could take 3 months. It could take 6 months. It could take 3 days. Who knows? But at some point, something breaks, and the only response to something breaking will be the Fed saying, "We're slashing rates. We're printing out. We're going to go QE this thing. We're going to save the day. More liquidity into the system." And what happens? Gold. Gold is going to skyrocket. Maybe Bitcoin. Maybe. But most likely gold, because Bitcoin is not held widely globally, and it's not held widely by central banks. Gold is. Gold's the reserve asset for the world at this point. And objectively, you can argue that Bitcoin can get there one day. It's just not big enough. I mean, Bitcoin is $1.4 trillion. Gold is $15-16 trillion. If for Bitcoin to work its way up 10x from here, there's going to have to be a lot of selling, a lot of profit taking, a lot of coins coming into circulation back and forth, and that liquidity takes time to build. In a global financial crisis, money is going to ramp into gold because it's big enough for global markets to hide from, shelter in place from the US dollars. It has to weaken. But again, they can. This is the weird situation. Like, what do? I don't know how. I think they've made a mistake. So it's done. I don't think they can go raise rates now. I think it's too late.
So what do you think? What do you think they do in November? I mean, we're a few weeks away.
Going to cut, because the one thing I can say about the Fed, and you can quote me on this, the Fed will always make the wrong decision at the right time. It's true though.
Did you hear that, Jerome?
Whenever there's a critical decision to be made, the Fed will always make the wrong decision at the right time. And the wrong decision was cutting. And I think the market's telling them that, the bears are telling them that, everyone's telling them that, the bond market's shouting at them, the gold market, silver's going through the roof. Like, everyone's saying, you guys fucked up.
And the reason, just to be clear, the indicators that tell you that the market's yelling at them, break down those indicators for us.
Well, how do you have a situation where they cut 50 basis points and the 10-year goes from 3.6 something to 4.25?
Yeah, I don't understand how that happens. That makes no sense.
That's exactly the point. The market's saying, okay, well, we just don't believe that inflation has gone away, and we believe inflation is going to come back. So you want us to bet on the 10-year bond of the US. We're going to start factoring inflation in year 2 and 3 and 4 from here, and maybe come down. And you know what? We wind up at 4.25% yield, because you are going to have to go fight that inflation again, and we're going to have to pay the price. So when you're doing these bond trades, that's kind of how they look at it. They look at pretty much the next 10 years and see where's it going to wind up, and it's a good buy right now. And the guys are shorting the bond market. Also, if you look at the US dollar to bond pair, it's gone one way. I mean, literally, it's shorting TLTs and buying gold. The gold TLT pair. It's gone one way. Like over the past couple of years, it's just a one-way street. Gold's getting stronger and stronger, and U.S. Treasury is getting weaker and weaker.
Let's talk about a few major macro things that are happening right now. And I'm curious which ones of them you think are catalysts, you think are concerning, or which ones you're like, I don't pay much attention to that. So we've got liquidity surging across pretty much all economies. China really leading the way right now. We've got geopolitical tension seems to be looming rather large. We've got the Fed, which we've talked about ad nauseum, so we don't need to talk about more of that. And then we've got the U.S. election. Those are sort of the three major catalysts that we talk a lot about on the show. Of those three, the U.S. election, geopolitical tension, and liquidity surging across markets, which ones are you watching? Which do you think might have the biggest impact or cause a catalyst for the markets?
I mean, geopolitical is the one that it's kind of, the U.S. election is kind of already baked in real time. The markets trade on Polymarket and whatever else based upon people are positioning. I mean, Paul Tudor Jones went on this week and said that he's positioned for a Trump win. So people position based upon what the prediction markets are saying. I think global tensions are really high right now. I don't think we can look at the global market and say that geopolitics isn't a concern. It's a big concern. So. There's just so many variables, right? You've got Ukraine, you've got Israel, you've got Taiwan, you've got so many things that can happen. I don't think anything happens before the election's over. I think people, most foreign leaders looking to start a war right now, they're going to want to know whether it's Trump or Harris. And quite frankly, like without being political, I think that it's very clear that the current administration and Harris as a sort of extension of that would probably lead to more of these sort of, geopolitical rivalries being up. I'm a registered independent. So I don't have a bone in this race. Other than to say that I think that they would be more fearful of starting these wars with Trump than they would be with Harris, just because of the way the administration has responded in regards to Ukraine, Israel, whatever else. So that's just a personal sort of viewpoint on it. And if that's what America wants, we want to go get involved in a whole bunch of wars, then fine, vote for Harris. That's kind of what it's looking like right now. I mean, on the crypto side, obviously, Harris is not good for crypto. The Democrats have been terrible for crypto. We know that. So if you're supporting crypto and where crypto is supposed to be going, I think the Harris administration would slow down crypto dramatically. And even if they replace Gensler, it'll just be someone else, right? It's the Elizabeth Warren agenda that's coming down hard on crypto. And so I think the market's just kind of wait and see. I think the crypto market's going to rally hard if Trump wins, and I think it's probably going to tank if Harris wins. And so it's a 50-50 though. The prediction markets are saying 60-40 maybe on Polymarket. I think it's probably 50-50. It's a coin toss right now. Nobody knows. It can go either way.
So for you right now, you're allocating based on a viewpoint that there's too much uncertainty. And when there's this much uncertainty, you're saying, hey, I'm pulling out. I'm not going to go risk on. I'm going risk off, and I'm investing in only the safest, most consistent gold, silver, real estate you mentioned. Is that
yes,
correct?
Because it's inflation proof, right? So the one thing we know over time is that gold and gold and property in particular, silver's a bit more of a beta play on gold, but gold and property have always maintained value over any sort of inflationary cycle over a long enough period. In the short term, I think that the debt levels are unsustainable right now. We know that at the current interest rates, that they're going to try and drop the interest rates to make the debt sort of balance the books a bit more. So the debt level is growing every single day. We're adding hundreds of billions of dollars a month in debt. We've got no ceiling right now. And I think at some point the rest of the world says, fuck it, we've had enough. We can't buy your bonds anymore. And so we're paying interest on interest right now. We're paying compound interest. We are like a guy who earns $50,000 a year and sends $100 and something thousand dollars in credit card debt. And that's where we are right now, right? And so there's no digging our way out of this without balancing the budget. And quite frankly, all the Feds, as much as they're trying to wind down the balance sheet right now and get it smaller, they're doing it for a reason, because they know they're going to have to expand it at some point. And so they're trying to get winded down as much as possible while there's liquidity out there. Because when the liquidity disappears, they're going to be the ones picking up the tab on it. So so for me, gold is just like this. I don't see gold dropping from I mean, let's look at the worst case scenario in the Great Financial Crisis, 2007, 2008, when it actually hit. I think gold dropped 20%. Where everything, the other things were down 90%, right? So gold's going to drop the least. But that wasn't at a point where I think the Fed had a reputation for doing what they've done in financial crisis before, and that wasn't at a point where, I mean, we saw it happen during COVID as well. I think the response to the U.S. Having a collapse, a crash, some sort of a response that something it has to respond to will be to print more money and lower interest rates. And I think gold just benefits dramatically more than anyone else. So I wouldn't be surprised. I'll make a prediction. I think in 12 months' time, gold's sitting at $4,000 to $5,000 an ounce from 20 right now. I think we could even see a double. But remember, that's not just you. What people misunderstand about gold is it's a global asset that people are buying everywhere, all countries in the world. And so when all these other countries are getting devalued, people are buying their gold, they hoard their gold, whatever else. And there's just lots of ways to buy gold. There's not that many ways to buy crypto in some markets, right? Some markets are they're cash markets, and getting crypto is a bit harder. Transaction fees are issued. Just buying some gold and holding it. People, rings. India is famous for hoarding gold. So I can just see more people saying, look, the dollar's crashing or whatever. We have to buy gold. So I've become a bit of a gold bug. I don't think it's a long-term trade. I think it's
I was going to ask that. What do you think the time frame on that trade is?
I'd say it's a year or two trade for me. And I think silver could pop to $50 to $100 easily. So gold and silver. At this point, I'm just trying to protect wealth and assets and capital, right? So if leaving it in cash is just a bad idea at this point. I mean, it's good to have cash when everything else is crashing, but I just don't know how long it's going to be. I don't know whether it's 3 months, 6 months, 12 months. And in those 12 months, inflation is going to eat away 7-8% of the cash. Inflation, I don't think is 3% or 4%. I think it's closer to 7 or 8, at least in California. So, you have to protect your buying power, and I think gold's been the best hedge for that.
So if you're not in your position of having had the success that you've had and have the financial means that you have to be in a position where you are focused on protecting your assets and maintaining your assets. Warren Buffett, as you said earlier in the show, also in a similar position. If you're more of a younger or a newer investor that is looking to capitalize right now, what would be your advice to that type of person?
So I hate giving financial advice to other people because it's always it's so subjective based upon your personal set of circumstances. Like, I'm going on about gold and silver because I'm in a position right now where I have to take my some of my assets and say, okay, look, how do I hedge against systemic risk to me, to the market right now? Excuse me. So for younger investors, when you're starting off in the market of investing, I think the best investment you can ever make is your own house, right? And so buying the biggest, most expensive house that you can possibly afford is what I've always told people to do, and I've done it for myself. And and I've stretched myself to the limit where I was actually stressed about making the mortgage payments before, because I was like, geez, I went too big, and I've got too much to pay off and whatever else. And with enough time and go. So the reason I think so I want to make that. So right now, mortgage rates are ridiculously high. It's over 7% in the US. Doesn't make sense to buy homes right now. So if you haven't bought a home, probably best to just wait because you don't want to be paying that level of interest. If you do have a home and you probably locked it in, hopefully at 3% or 4% or even 2%, don't move. And no one's moving right now. The stats are very clear. But that is the cheapest money you'll ever get at this point in the economy. So all you want to do is don't pay off that debt faster than you have to. If it's an interest only, that's great. If it's capital plus interest, just pay the minimum payments every month. Don't make the mistake of trying to pay off debt that is actually devaluing faster than what the rate of interest is. So that's the first thing. Now, if you've got enough cash to invest, buy a house if you don't have one, right? If you can buy a house cash, I think people should do that, and because you live in it, you get utility out of it, you start saving on rental. And that's another good way to invest. So and this is like very basic financial advice, but I always tell people get your life in order first, and put most of your wealth, or at least some portion of your wealth, into something which is you have utility, it saves you money in some way, and it grows in value, and it's inflation proof. And that's what homes are for the most part. Obviously, you know, market timing, but over the long term, you know, it's proven to be the best investment. Then the next thing is, so once you have your house, the next bit of advice is get a 12-month emergency fund. Okay. If you don't have 12 months of cash in the bank, and we should all know this from COVID, that's your first priority. Not investing in crypto, not buying gold, not doing all those other stuff. Just go and put 12 months cash in the bank, ideally 18 months. And so now you know, okay, I've got my house potentially, and I've got 18 months worth of cash in the bank. So guess what? Now your cortisol levels are low because you don't have a lot of stress and you can think clearly and you can make good decisions. Put that money in a sort of savings account that you don't touch. Any excess cash you get, first of all, make sure you're cash flow positive every month, that you're actually, you know, running above your expense line every month. And then any excess cash, to figure out what the best thing to put it into right now. I don't like stocks. I think they're way overvalued right now. And no matter what bull run happens in front of us, I just think that they're overvalued and I wouldn't be paying for it. If you don't know what to do, I would just buy Berkshire Hathaway. I mean, if you're like a novice investor, buying Berkshire Hathaway is, I think, better than the S&P 500. Personally, because I think the S&P 500's got a herd mentality to it, which you can and will get caught off guard at some point. And I think Buffett and his team do a phenomenal job of managing capital. And then if you want riskier stuff, if you've got the aptitude to start a business, because that's the best way to make money and become wealthy. If that's your thing, if you don't want to be, if you have a day job and you just don't have a business, that's fine. But even then, I think people having a side business, selling some stuff online, you can make, you know, extra tens or 50s or hundreds of thousands of dollars a year to supplement your income. So having that second source of income is more important than being an investor in crypto markets. Now, you can put some in the crypto markets depending on your wealth, dabble a bit, buy some coins, but like, don't buy these stupid meme coins. It's just a freaking. You might as well go to the casino and go bet it all on, you know, on the roulette table. Meme coins, you know, unless you're scamming people, it's not worth it.
I hope not.
I know, because that's how the guys make money. They scam people, and so I don't play the meme coin thing at all. I think it's a big joke. I think it's stupid because you probably know as well as everyone like how these guys operate. They clear up these like fake communities. They get everyone excited. People start buying, and then they take the cash and they run and they rug it. If you're going to get investing in crypto, go buy. I mean, obviously, as a C investor in Solana, I think Solana is probably the best blockchain out there in terms of throughput capacity and user adoption so far for those metrics. And so buy some Solana. But if you like Bitcoin or Ethereum, buy some Bitcoin, buy some Ethereum, build. But that, crypto should not be a big percentage of your wealth. It should be a small percentage that becomes a big percentage one day. I always tell people put hard money when you have savings into soft investments that can become big investments that can, and when they become big, you take them out and put them into hard money again. So as an example, like let's say you put $10,000 into a Solana type investment, and now that's maybe not too meaningful, but it's a big bet for you. One day becomes $100,000. Hey, take the $100,000 out and go buy gold or something. It doesn't have to sit in crypto forever. And I think too many people make the mistake, and I've made this mistake many times, where I make the right bet, I see a 10x, a 50x, I leave it there because I think it's safe, and it goes back down, right? So put the soft money into hard assets is and soft money is something that's going to move more than 10% in a day is pretty risky, and that's equities as well. I mean, gold is not dumping 10% a day. I mean, you look at the charts; it's just not going to happen. So gold, if I ever want to get out, it's going to be, there's not a lot of slippage. I have to wait. Even if you go through a bear market, the fundamentals aren't there for it. Gold's safe. But yeah, I mean, Bitcoin dips 10% in a day very often. So it's not hard yet. It might get hard one day. It's not hard yet. So just keep that in mind. But I would say house first, personal savings fund second, and then dabble third in things which either a second source of income or build buy some Berkshire Hathaway or some other sort of index type funds. Don't try and pick stocks. It's not stock picking is, unless it's your full-time job, you're probably going to screw it up.
Most people do. Vinny, this has been a very enlightening show, because you could not have been more of a contrarian of the typical show that we do. And I know you're not doing that on purpose. You're just being yourself.
I haven't watched the show. I have to apologize. So
Yeah, no, that's okay. I didn't expect that you had, but it's fascinating to get somebody on who, when we are so focused on highly risky assets in crypto and talking about how to invest in those and how to take advantage of the cycle. And you're making a great point, which all of our listeners and all of our viewers should know, which is that, you know what, no matter who you listen to, we could bring on people from both sides. There's always somebody that will say one way or the other. Nobody actually knows what's happening in the markets. And there's so many factors at play that you need to do what is best for yourself. And that's the best advice you had, is it isn't a one size fits all approach. You got to decide what's best for you and what you want in your life, in your goals, and in your family. And based on that, make the best decisions for you. Vinny, thank you so much for joining us today and sharing your thoughts, and for being a level-headed adult in the room at a time when there's too many people maybe screaming for a bull run or a banana zone. And let's be real, it could go in either direction, and you've got to listen to all the different viewpoints to make the decision that's best for you. Appreciate your time today, Vinny.
Thank you, Jay. I appreciate it.
Thanks for listening in, everybody. Have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note. This show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.